Good afternoon, welcome to GrainTV. My name's Cody Bills, this is Logan Burgess. Today is August 24th, Friday for the weekly wrap-up. Take a look at September corn. We traded at 8.03, down 5 3/4 on the day. September beans traded up 10 3/4, finishing off at 17.38. And wheat in Chicago traded down 7, closing at 8.67.5. Logan, one of the major things that will be affecting us on Sunday, since it didn't come out while the market was trading this Friday, will be the pro farmer numbers. How did they come out? Do you expect them to move the market at all on Sunday?
Yeah, well, let's take a look here and see what they did come out with here this afternoon. These were released at 2 p.m. Central Time, so right around the close of the market. As you said, no action was traded as a result of these numbers. Pro farmers coming in at 120 bushels per acre for corn, well below where the USDA projected in their August 10th report here. The USDA is looking for 123.4, as you can see from this table. On the production side of things, coming in below production as a result of that real yield revision lower, 10.48 billion bushels here. Turning our attention to soybeans, as you can see, 34.8 bushels per acre expected there. So a little bit of a surprise for beans. You know, on this on the Pro Farmer Tour, they for the week have been releasing pod counts, not necessarily yield averages. So this was the first time we saw this. But the corn number here really should be a surprise to the market, I think. Coming in well below there, almost a sub 120 yield. What's kind of your take on that?
Yeah, I think this is definitely going to affect the market on Sunday. If you take a look at the state by state here, Indiana and Illinois, they actually revised this forecast a little bit lower than what they reported on day 2 and day 3. It looks like they take into account the droughtiness of the southern Illinois and southern Indiana, and that brought them back more in line with USDA. However, where they really deviated from the USDA is in Nebraska and in South Dakota. That's areas where they were about 10 bushels off and they were on the low side. So I think this average of 120.25 will most likely move the market Sunday night and most likely move them higher, barring any outside events, economic collapse or calamity, or even weather out of China.
Yeah, there's a lot of wild cards at play right now, and one of the more interesting ones that's been getting a lot of news recently has been with how low the Mississippi River is right now. Barge traffic has really been getting slowed down or even halted here. If we take a look here at what we're seeing for barge rates, you can see that here barge rates have really been surging, particularly around the port of Memphis here. This is where the river gets very dry. Near Greenville, Mississippi is where the river's actually been closed down at some point. So with all these barges stuck in the water here, there's not many empty barges left to fill. As a result, these elevators are having to pay more to acquire the barge to move the grain. And as a result, we're seeing basis actually decrease for the farmer here. Can you take us through what some producers in the southern states might be seeing in their area right now?
Yeah, right now I think, like what you mentioned, both of those events, both the difficulty in getting grain to the Gulf, as well as the early harvest, I think, is putting a lot of pressure on these rates, the basis that these farmers are getting for their grain. What this is I took the average cash price for grain buyers on the river south of Memphis, and I averaged them out, and then what I did is I calculated basis off of the December contract, so we didn't have to deal with those ugly periods where we roll from a September to a December contract, or from a July to a September. And what you're seeing here is in red is 2011, so what we saw last year. Now in black, you're actually seeing this year, and you can see that we have actually experienced very depressed levels, and I think this has a lot to do with the difficulty in transportation. I also think that harvest is hit a little bit earlier. So what will most likely happen, we could continue moving lower for a little bit, but I would suggest that we will snap back maybe more rapidly than we have in the past, mostly because that harvested grain in the north, it'll be very difficult to get it downriver, and I think that will put more demand on the corn that can be acquired south of Memphis, that can be easily barged down to the Gulf to meet any sort of export obligations.
Right, certainly. So just another variable here in the cards as we move through harvest and into storage season here during our winter. It's something that's going to remain very important for the export front as it relates to these barge rates is the availability and the demand of U.S. grain from China. One story that we've been covering here kind of throughout this week were expectations of this typhoon Bolivan to make landfall in China early next week. If we take a minute here and kind of take a look in this circle, this is where the key grain growing area of China is. Initial reports for this typhoon was that it was going to hit smack dab in the middle of here. We had Reuters reporting potentially 20% of the corn and soybean crop could be demolished. That seemed to put a bid under the corn market. As you can see here right now, the most recent models that we're looking at actually has this typhoon kind of skirting that area that people were really concerned about. So a little bit less of an issue there, but certainly something good to keep an eye on here. One final thing before we let you go on Friday afternoon here. Managed money position in corn. We just got this, Cody. We just received the commitment of traders reports. And as you can see here, we've been talking about this 300,000 contract level. On the vertical axis here is the net position held by managed money. On the horizontal axis, obviously, it's time here. We're looking back about a year. And this 300,000 level is where we kind of peaked out last summer before we had that big sell-off coming into the fall. We were kind of keeping an eye on this here, and it looks like this week managed money surged higher, put more longs on here. So as you can see, has extended it really into uncharted territory for what we've been looking at.
Last time we talked about that, we were saying we were getting up towards the highs, and we were wondering whether or not funds will start taking off. I know one of the things that we were talking about is the fact that this is such a publicized drought.
Right.
This drought, this crop destruction is so widespread and so known to just about everyone in the U.S.
Right.
Yeah, I mean, it's on CNBC. They're just absolutely touting it, which means, in my opinion, that we're going to see money that we don't typically see trade these agricultural commodities come into the market, and that will help us get above the levels that we've typically seen. Just because of how widespread and mainstream this drought is, I wouldn't be surprised if we could go even higher than this.
Yeah, I wouldn't rule that out at all here. And kind of the bottom line here of this position is when they establish an extremely long position, at some point those positions have to come off. And when they head for the door, there could be some serious selling pressure in the corn market. And certainly as a producer, it can be good to have some protection in place from that kind of event.
Yeah, for those that remember last year, I mean, we had some very sharp sell-offs, but we continued the rally. But we had extremely sharp sell-offs, and what that does is it just kind of it flushes out the week-long positions, and it can hurt. It can really hurt. It can lead to some serious margin calls. So all I can say is that as you get more and more people long, you got to be very nimble, because when this thing turns, it will turn very fast. People will be running for the door, and you do not want to be trampled by them, especially on a Friday afternoon.
That's true. Well, it'll be really interesting to watch these markets trade here Sunday afternoon when we get the markets open. If you are interested in getting live quotes at your home or office there, visit us at grainhedge.com. You can click the Take a Demo button, get a free 10-day demo set up for yourself there, and take a look at the platform. I think that kind of wraps up our show here for Friday afternoon. Cody, thanks a lot for joining us on GrainTV. We'll see you back here Monday morning.